analysis of CARO. Get ready to gain clarity and unravel the complexities as Hari Raam guides us towards a deeper understanding of this subject. Hari Raam is a CA final student from Tirupur. He is currently doing his third year of articles at Saravanan and Indra firm, Salem. He loves teaching and was the best paper presenter during the Pondicherry Mega Conference held in January 2023. The dais is yours.
Thank you. Thank you for the introduction. As already said, myself Hari Raam, a CA final student representing Salem branch of SIRC. I am here to present the topic on analysis of CARO 2020 from Companies Act 2013. Before we move on to the topic, let us discuss the company being invested by the shareholders and being managed by the board of directors. So, where the auditor comes into the picture, why auditor needs to audit the books of account? So, there must be one independent person required to verify the books of account and to prepare the audit report. After completing the audit report, auditor must also follow certain 21 requirements to be reported for the applicable companies. Such 21 requirements are being discussed in the CARO 2020. So, CARO means Company Audit Report Order 2020. So, what are the duties of the auditor are discussed in the Companies Act means he must inquire on certain matters like whether books of accounts are properly kept or not, personal expense are being treated as revenue expense, and he must prepare audit report, sign the audit report, comply the accounting standard, and should report on frauds and other central government as other matters as specified by the central government. So the applicability of CARO 2020, it is applicable to all the company including foreign company, but there are certain class of exempted company not required to prepare CARO 20. So 6 class of company: insurance company, banking company, 1% company, small company, section 8 company, and private company. Here private company means not all the private company. Private company which is not being the subsidiary or holding of public company, or having paid up share capital or free reserves, paid up share capital and reserves not more than 1 crore as on the balance sheet date, and total borrowings not more than 1 crore at any point during the financial year, or total revenue is not more than 10 crores during the financial year. So these are the companies being exempted from preparing CARO 20. Except this, all the company must require to prepare. So now we move on to the CARO 2020. So before CARO 20, CARO 2016 was there. So what are the broadly changes means 7, as the SAR said, 7 clauses being retained, 7 clauses being retained with changes, 1 clause being deleted, that is managerial remuneration, 5 clauses being newly introduced, and 2 clauses being reintroduced from 2003. Totally 21 clauses are there in CARO 2020. So these are the broad view we are going to discuss in few more minutes. Let us go into the topic. So as you all know, the fixed asset of the company are plant, property, equipment and intangibles. So auditor should report that whether proper books of accounts, proper records are being maintained, quantity and situations are not, and physically verified by the management at the reasonable intervals are not, and for all the immovable properties, proper title deeds are in the name of the companies or not. If it is not in the company's name means, auditor should report the description of the property, gross carrying value, actually the name held in the name, and whether it is held in the name of promoter, director or relative, and reason for not in the name of the company. Revaluation. Any revaluation is being done, it should be as per the registered valuer, and any change is more than the 10% means auditor should specify such changes. And Binami transaction. Any Binami transactions being taken by the company and which is being held as proceedings with the company means auditor to be disclosed with the company's report. Next, inventory. Inventory is the principal revenue generating of the company. This also should be physically verified by the management at the reasonable intervals. Auditor should report whether it has been done or not, and it should be properly covered with the insurance policies and coverage procedures. And any discrepancies being noted by the auditor that change is more than 10% means to be reported. And by surrendering the working capital limits with the banks, any loans are being availed more than 5 crore limit means such point to be discussed by the auditor. And also should verify with the quarterly returns and the annual returns submitted by such company to such financial institutions are being agreed with the books of accounts or not. Next, investments. So investments means investment or providing guarantees, securities, granting loans and advances. So anything done by the company during the preceding financial year means auditor should report aggregate amount and balance outstanding as on the balance sheet date with subsidiary, joint ventures and associates, and other than subsidiary, joint ventures and associates. Next, any loans and advances being given, it should be properly repaid with the principal portion and interest portion, and the schedules are being following or not. Anything being overdue more than a period of 90 days means amount to be reported. Whether reasonable steps taken by the company are not also to be reported. Next, any loans or advances being renewed or extended as a fresh loan from the same company for the purpose of closing the existing loan means the amount and percentage of such holding to be reported. This particular requirement is not required for the company whose principal business itself are lending loans. Next requirement, section 185 and 186 talks about loans, investments, guarantees, securities to not be granted to certain persons. So section 185 of Companies Act tells about company should not provide loans or provide guarantee security in connection of with any loan to the director or his relative or his partner, or director of the holding company, his relative or his partner, or any other partner or relative of such a director, or any firm in which such director or relative is a partner. Next, section 186 of Companies Act tells about a company can make only up to maximum of 2 layers of investment. Let me try to understand with some example. So A Limited being invested in B and B in C and C in D means first 2 category are 2 layers. When C investing in D means that is third layer, that is prohibited. So the company can invest like this. A Limited can invest in B, C and D. This is only 1 layer. So company cannot invest or provide loan more than 2 layers of company. This also having two exemption to it. Outside company and subsidiary company from any investment subsidiary company are being exempted in this requirement. Next, deposits. As per the Companies Act 73 to 76 tells about, 73 talks about prohibition of acceptance of deposits from public. Only eligible company can accept deposits. Eligible company means a company which is a public company having a turnover of 500 crores or more and net worth of 100 crores or more. So that company only can accept from public, and also certain rules talk about maximum of 100% of paid up share capital, free resource, security premium can be collected. Private company can accept deposits from the members up to maximum this much %. So all these provisions should be complied or not audited to be reported. Next, cost records. As all know, the applicability of cost records says about it is being segregated as regulatory sector, non-regulatory sector, and production of goods and services up to a maximum of 50 crores or 25 crores or 100 crores or 35 crores as a case may be. Cost records should be maintained by the company in the form of CRA 1. Whether it is properly applied or not, and it should comply with the section 148 subsection 1 of Companies Act 2013 or not, audited to be reported. Next requirement, statutory dues like GST, EF, PF, ESI, income tax, sales tax, all the dues to be paid within the due date. If it is not paid within the due date, anything which exceeds the maximum of 6 months means the amount to be indicated. If such amount is not being paid because of any dispute means the amount and the forum where dispute is pending to be reported. Any unrecorded income being found by the tax authorities during the tax assessment period by surrendering or disclose means such income being subsequently properly dealt in the books of accounts are not to be reported. Any repayment of loans or borrowings. So a company borrowed any loans, it should be properly repaid in proper period. Whether any default is made, auditor to report name of the lender, amount of default, whether it is a principal portion or the interest portion, and number of days being delayed, and nature of borrowings including debt securities to be reported. Followed by, if any banks or financial institutions being treated such company as a willful defaulter means that also to be reported. Any term loan being applied for other than the purpose which is availed, it should be reported. Amount and nature of borrowings to be reported. Any short term used for long term, amount and nature of borrowings to be reported. So same, loans and borrowings, no default to be made. Anything borrowed for the purpose of subsidiary, associate, joint ventures means auditor to be reported. Any initial public offer, further public offer being raised means any default is made during the year means auditor to report, and whether the company has taken reasonable steps or not to be reported. Private placement, preferential allotment, convertible debentures are as per the section 42 and 68 are not to be reported. Any fraud being fraud is an intentional act by the company. So any fraud being found by the auditor, by the management or by the employee means the fraud amount is less than 1 crore needs to be reported to the board of directors or the audit committee as the case may be. Fraud amount is more than 1 crore need to be reported to the central government, and whether it is properly followed or not to be reported. Nidhi company, as you all know, providing funds to the other concerns. So net owned fund to deposits to be maintained in the ratio of 1:20 means 1 rupee of net owned fund to be, if a net owned fund is 1 rupee means deposit to be maintained at 20 rupees, and any unencountered term deposit should be maintained at 10%, and then there must not be any default in payment of interest on deposits. Any related party means Mr. A is a director. I will tell you an example. A is a director in the ABC Limited, and A is also a partner in the AS Associates means AS Associates and ABC Limited are the related party. That should be as per the any transaction taken means it should comply with the section 177 188. Next, internal auditor applicability is there means the company should follow that section, and whether properly employed or not, if applicable, that should be reported. These are the companies mandatorily required to appoint internal auditors. Any non-cash transactions made during the preceding financial year means it should comply with the section 192 of Companies Act. As per the RBI's Act 45(1)(a), any company required to be get registered like NBFC's banking means only after such registration that any transaction to be taken place. Before such registration, any transaction taken place means that should be reported by the auditor. Any cash losses being incurred by the company during the preceding financial year means the amount to be stated by the auditor. Resignation by the auditors. Any auditor being resigned from the concern after his appointment, any issues, objection, concerns should be also accepted by the upcoming auditors or not, whether properly resigned or not, to be reported by the existing auditor by preparing CARO 20. Any material uncertainty in relation to the realization of financial assets and realization of liabilities. This talks about whether the company is being capable of meeting all its liability with its existing assets or not, on the basis of financial ratios, aging and expected dates of realization of assets and payment of financial liabilities and other information accompanying the financial statements. And the most important point of CSR requiability, as already said by the session chairman, CSR should be for the applicable company. What are the applicable company to contribute to corporate social responsibility? So the class of company which are required to form the CSR committee means every company having net worth of 500 crores or more, or turnover of rupees 1000 crores or more, or net profit of 5 crores or more, mandatorily appoint the CSR committee, and 2% of the preceding 3 financial year net profit to be contributed. If any unspent amount is there means it should be transferred to the schedule 7 as per the provision 135 subsection 5 and subsection 6 should be followed. Any qualification adverse remarks being found in the consolidated financial statement by the auditor of such concern means that also should be discussed by this company auditor. Details of such company and the para number of such CARO to be reported. Thank you. Hope everyone understand the topic, and I especially thank the session chairman CA Ravi sir and the Panchabootha conference who are managing the properly helping the persons to come here, and thank you to present myself here, and also thank the Coimbatore branch of SIRC followed by the Palakkad, Salem, Erode, Tirupur branch. Thank you.
Thank you, Hari Raam. I now request the session chairman CA Ravi to give the concluding remarks.